This reflation trade, you think the narrative's going to subside, don't you?
Yes.
As we move into 2017. Why is that?
I think it's important, Mark, to first take a step back and look at the bigger structural issues, because in the end, you need to look at the structural issues and where we are in the cycle, right? So looking at that from our perspective, the big issues remain around debt and demographics, right? In the end, we had a financial crisis in 2008, which led to more and more debt being piled into sovereigns and ultimately into emerging markets. We went from a debt system where we had debt to GDP in global GDP sense of 210% to 250. So actually, we went into a financial crisis with too much debt, and here we are 8 years later with 40% more. And actually, the issue really is that the debt is now sitting largely in emerging markets, and the clear place there is China, right? We all know the numbers around China. China's debt has increased by $20 trillion since 2008. And importantly, you look at the level of corporate debt relative to income. It's gone from 4 to 8.9 over the last 8 years. I mean, it's an astounding increase in the level of debt. So debt, firstly, is a major issue, right, as we go into the future. Secondly, demographics, right? I mean, if you look at the role demographics have played over the last 50 to 60 years, it's been a huge contribution to growth. If you take the US, for example, the US in the Reagan era, contribution to growth from demographics was 1.6%, right? Over the last 5 years, it's been 0.5, and that's actually ratcheting down to 0.25 over the next 5 years. Even more alarming is China, right? So China, if you take the contribution to growth from China's labor force, the increase in the labor force, it's been obviously staggering. We know the numbers. Over the next 5 years plus, that is going from positive to negative. Right? So demographics plus debt really are the huge structural issues, right? And what that really means is we live in a world which is one of low trend growth, right? That in itself, put policymakers aside, is deflationary, right? And that's the world which this time last year was what financial markets were getting.
But it's shifted now, hasn't it?
Absolutely.
The deflationary narrative.
Yes.
And you're suggesting it's shifting to possibly a stagflation environment.
Yes, I mean, the risks have gone up, absolutely. I mean, so just continuing with that,
yeah.
so really what happened from a year ago was the Fed stepped back, got much more dovish, right? Dollar started to kind of come off. That on the top of the China response and more credit into the system created the reflation boom we saw in commodities well before Trump, right? And well before Trump took the White House, we started seeing government bond yields go up on the back of that kind of reflation narrative. So it was kind of we got out of jail by virtue of the dollar taking its pressure off, right? So here we are 1 year later. And what is it really that is important around Trump, right? Is Trump a game changer? And this is the kind of the debate around stagflation and deflation. Absolutely in the deflation camp. However, now stagflation is most certainly changing that, and that is all around Trump's policies around protectionism, right? Because if you think about that world I just described, right, in the end where we have low trend growth, low levels of productivity associated with demographics and debt, what does protectionism do? I mean, very simply, protectionism ultimately moves the factor of the productive areas back to the US, which are obviously less productive. So the global productivity in itself will decline. So global growth in itself, just virtue of Trump policies, will clearly be under further pressure, right? So now that's a medium to long-term observation. It doesn't change what happens in the next 3 months. But like we saw back in the 30s, I mean, I think a lot of people are spending time dusting off the textbooks, looking at Smoot-Hawley, right, and saying, well, what happened there? Okay, lots of things were going on, but in the end, the change around global trade in 1930 was a big deal around what happened, associated with the global depression. We had global trade by virtue of the depression, but also linked to it, declining significantly by virtue of trade tariffs. Back then, it was 45%. Under Trump administration, I mean, it's unknown, but you could easily see tariffs going up 20 to 30%. If that happens, that has a major impact on what has been a huge globalization